They might be able to print their own money, but this fake currency is only used for offerings in traditional Chinese rituals. When it comes to real-world investment, this company has a hard time, just like thousands of other small private businesses. So, in a bid to secure funding, they're turning to China's fastest-growing stock market, the National Equities Exchange and Quotations.
Why do we want to join the NEEQ? Because we think the NEEQ will become the Chinese NASDAQ in the future.
Susie Wu's firm invests in over 300 companies listed on the new bourse. She says the lack of financing forces many Chinese companies to turn to a loosely regulated, parallel money lending industry.
The small companies have risk, and so who wants to put the money into risky companies? And that really creates opportunity for the so-called shadow bank.
The NEEQ offers companies that can't meet the requirements for listing on the Shanghai and Shenzhen markets a chance to go public. And it says those listed raised more than $18 billion last year and more than $4 billion just in the first 2 months of 2016. But some analysts say potential investors should remain cautious.
The concern with the NEEQ is that they're lowering the requirements of these firms for these firms to list, but that they also aren't requiring full and accurate disclosure of the information, the products, the financial risks that investors might be facing.
Access to capital is a key question for Communist China's economic future, and Beijing is betting on smaller companies to become the new engine of growth, to move away from state-owned heavy industry, which is blamed for pulling down the world's second largest economy.